History tonight for the Reserve Bank.
Another first, a press conference with the Governor, Michelle Bullock.
A new era is beginning at the Reserve Bank.
More accountable, more transparent, more effective, more independent.
With the Governor increasingly under the microscope, leaving rates on hold and defending the central bank's track record.
I really understand that the mortgage holders are sweating on this. I do understand that. But the big issue that's confronting not just mortgage holders, but everyone, is inflation.
The Reserve Bank has changed its mind on how quickly cost of living pressures will ease. This year, the bank expects inflation to fall much quicker than it previously thought.
We have made good progress. Absolutely, we've made good progress. But there is more work to do.
Most economists and financial traders believe the RBA is done with its rate hikes after lifting them 13 times in just under 2 years. But the RBA governor left the door open to further hikes.
We are not ruling out what we might have to do next.
What are the biggest risks on the horizon that might cause you and your colleagues to lift interest rates again?
Look, what worries me, I think, most is that we don't manage to bring inflation back down to target without collateral damage, with more damage in the labour market than we can avoid.
Bowen He is hoping the RBA's next move will be down. His home loan interest rate is about to surge from just under 2% to well over 6%.
We are discussing with the bank around some strategies around how to manage that. But yeah, look, it's going to be tough.
As his costs piled up, he's had to cut back on a lot of things.
We're cutting back a lot on eating out. On groceries, we are definitely looking at cheaper items. So it's really just about being able to save wherever we can.
Homeowners with a $750,000 mortgage are having to fork out an extra $1,815 a month compared to what they were paying before the RBA started lifting rates aggressively in May 2022. As for when borrowers can expect some mortgage relief, markets are betting the Reserve Bank will cut rates twice by the end of this year. But there are some economists who reckon that's way too optimistic.
You're not going to get a rate cut in the first half of this year. I think more likely at the back end of this year. We're talking about November. Markets are now talking about August, September.
The RBA governor dismissed the possibility that the Stage 3 revised tax cuts might be inflationary and held firm on raising rates last November, despite recent weak economic data.
We didn't make a mistake. The risks had shifted to the upside, and in order to mitigate some of those, to give a bit more assurance, that was the appropriate move at the time.
Bowen is worried the central bank might hike again.
If the rates keep rising, yeah, I'm not sure what's going to happen.
Uncertain times ahead with uncertain forecasts.
Luci Ellis is a former RBA insider who, as Assistant Governor, provided the board with monthly updates on economic conditions. Now, Westpac Group's Chief Economist, Luci Ellis, joined me earlier. Welcome. Do you expect the RBA's decision to pause was a very straightforward one to make?
Yes, it was one of the most widely anticipated monetary policy decisions in quite some time in Australia. Almost everyone expected the RBA to have rates on hold this month. They're not ready to completely rule out a further rate increase, but I think most people would expect that they won't have to act on that.
The RBA has made significant changes to its inflation outlook. How much confidence do you have in its new forecast, given it did miss on its November statement of monetary policy?
Almost all the data has come in softer than expected, than the RBA expected since the November forecast round, so they have taken back some of the adjustments that they made in November. I think the September quarter CPI was something that spooked them. They are concerned that services inflation, domestic inflation, is still too high for their liking. And I think just some of us are a little bit more confident that that will come down given the squeeze on the household sector that's happening.
And yet the RBA does seem to be concerned about the spending power still out there in the economy. Is it just jawboning on the prospect of further rate rises, or could we yet see another one?
I've no doubt that they believe that there is still spending power that puts some inflationary risks into the domestic economy. While the data hasn't been in line with their November forecast since they were released, it's a big ship to turn around, and they're not going to do a complete 180 on their view of the economy in the space of 3 months. They do have lingering concerns about that. The reality is that the household sector is being squeezed by a combination of higher rates, very high inflation that is coming down, and a higher tax take. And declining real household incomes is just not something that can sustain strong growth.
I know that something the RBA has published today on productivity has piqued your interest. Can you explain why?
Yes, the RBA had previously been concerned that the measured decline in productivity wouldn't recover, and if that were to have happened, it would have made it a lot harder to get inflation back down again, because that would have added to rising labour costs. What we at Westpac Economics have been saying for a while now is that they needn't worry. Some of that was measurement, some of that was simply an artefact of the fact that you had population growth rising very quickly all of a sudden, and the rest of the economy, the capital that workers had to work with, just simply couldn't catch up. Over time, it does catch up and productivity recovers. That was our assessment, and you'll see in the statement on monetary policy that the RBA has also come to that view.
You had forecasted the RBA would be in a position to start cutting rates no earlier than September. Does that remain your position after today's statement?
Yes, nothing in what we've seen of the statement or their other communication today has changed that view. It may not be the RBA's view necessarily, but we do think that sometime later this year, probably around September, the RBA will have enough comfort that inflation is coming down quickly enough for their liking to be confident that inflation will return to their 2 to 3% target, and indeed that productivity growth has picked up enough that they don't need to worry about that being a cause of a slow decline in inflation. So we think they will be able to reduce the amount of restriction that their policies are creating on the economy. They won't necessarily become stimulatory. I think maybe only 1 or 2 rate cuts towards the end of this year. We've penciled in September and November. Things can change from then, but that's still our view.
Did the RBA make the wrong call when it hiked in November?
I don't think we can say with only 3 months of hindsight whether a call was right or wrong. I think based on what we were seeing, there was arguments for and against, and given their concerns about inflation expectations and about productivity, it's understandable that they took that view. They cannot afford to have inflation come down any slower than what they're already projecting, and so that they really had to tilt on the side of being more restrictive. I can understand their position. I think it's just simply that the facts since then have turned out a bit weaker, and certainly at Westpac Economics we're more confident than the RBA is that productivity will recover and that domestic costs will subside.
How will we know if the RBA has overhiked? Will it be defined by a hard landing?
We're not expecting a hard landing, even with the most recent rate increase, and even if they increase rates one more time, which, as I said, we don't expect. Essentially, if they've overdone it, you'll see inflation come down a lot more than they expect and unemployment rise a lot more than they expect. That's not our essential expectation. We think that what they've done broadly is in line with what they're trying to achieve, and the real question is whether there are any other events in future that are so far not able to be anticipated that push them off trajectory.
Luci Ellis, thank you.
Thanks very much.